with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, Premier Li Qiang emphasized China's commitment to opening up at the 7th China International Import Expo in Shanghai. And Boeing strike has ended as workers accept a new contract. But what are the challenges ahead? And now let's begin with our top story. The 7th China International Import Expo is in Shanghai this week. Chinese Premier Li Qiang delivered a keynote speech at the opening ceremony. He has pledged to further expand opening up and turn China's vast market into great opportunities for the world.
When it comes to promoting and expanding opening up, China has all along honored its commitments. We have fully delivered the pledges made when joining the WTO, reducing our overall tariff to 7.3%, which is even lower than the set target of 9.8%. We have followed through on all the opening up measures announced at the previous 6 CIIEs, including the recent step to remove all restrictions on foreign investment access in the manufacturing sector as promised.
This year's event has attracted participants from more than 130 countries and regions. So for more on this, join us on the line now are Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. So Yan, first I will start with you. What's your main takeaway from, Premier Li's keynote speech at the opening ceremony?
Right. So I thought this is a very clear and also very comprehensive speech in terms of, on the one hand, he talked about really China abides by the principle of multilateralism. It is going to really uphold that opening up principles, and so adhere to the international economic and trade orders and to fulfill multilateral and bilateral economic and trade agreements. He talked about China is going to continue to expand institutional open up and to align with the high level or high standards, rather, international and economic trade rules. So this is really important against the backdrop of the rising unilateralism, protectionism that is facing the world right now. So I think in principle, he makes it very clear that China is going to continue to embrace multilateralism, opening up, and also, really safeguard the multilateral system with the World Trade Organization. Then he also talked very specifically about some of the actions that China is going to take. For example, he talked about upgrade the pilot free trade zones. He talked about giving tariff free to 43 the least developing countries. He's also talking about how China is going to explore the implementation of the investment facilitation for development agreements. So a lot of these are really specific steps that China showcased that it's committed to opening up, and also institutional, improvements, right, to really build a open and efficient trading system to join in this sort of global trading system in a more effective way.
And Dr. Zhou, so as Yan mentioned, Premier Li said China will further expand the institutional opening up. So what do you think will China do specifically on this front?
Yes, we know that China is a very important member of WTO, as Yan have mentioned, and we have firmly make our commitments in the WTO, like not only for the agreements, but also for a lot of plurilateral levels of initiatives. And I think that is one of our commitments. We want to fulfill that commitment. That means that we have to try to improve our transparency about the laws making and the regulations making, and involve more participation from the foreign investors. And besides this kind of fulfillment, I think it is also important to notice that China is trying to do something voluntarily. So we are trying to open our market by, just by ourselves. We don't expect a lot of the same things taken by other countries. So we are going to reduce our investment barriers or requirement for the foreign investors, and the same way, we are trying to provide a better innovative ways and the space for the innovation by all the stakeholders, including the foreign companies. So these are really important things. And I think that is also one very important part of China's urbanization process. And we are going to provide a better and connected space for the development of all the stakeholders and provide a better opportunities for the real our partners in the world.
And Dr. Zhou, so last year at the 6th Import Expo, the Chinese premier said China would remove all the market access restrictions in the manufacturing sector for foreign investors. And China has followed through on that promise and fully opened the industry. So what impact does this have on the foreign investment in the country?
Yeah, this is just one very specific example that you have mentioned about the manufacturing. We know that manufacturing is one of the main topics in the recent years. We see a lot of countries are trying to industrialize or reindustrialize their economy. So they need a lot of space, not only to enjoy the products, but they want to produce those products. Actually, for China, I think that China is the best place for the manufacturing to find some partners along the supply chain and the industrial chains. So we reduced all the barriers, for the market access for the manufacturing from other countries. And it is possible for them to try to find some better place and ground to cooperate with. And there is also another factor that attracted these investors, because China has a super large market. The consumption is improving and upgrading. So the companies who are investing here to do some manufacturing, they can enjoy that. That's also one of the reasons why so many important multilateral companies came here to the CIIE to attend this expo. They want to show Chinese consumers their possibilities, their products, and they also want to provide a better the services related to these supply chains. So I think it's really helpful for them to do that.
And yeah, so at this year's CIIE opening ceremony, the Chinese premier said the country would continue to ease the market access restrictions in the telecommunications, internet, education, culture, and healthcare industry. So what are the opportunities do you see in these areas?
Right. So these market restrictions refer to foreign direct investment. So we know that now we remove all the restrictions on the manufacturing sector, and then these services sectors, some of them are protected in the past, and some of them are actually also protected in other countries, right? When it comes to education, culture, and healthcare, some of them are really strategic sectors that we want to make sure that these sectors are, well, in some ways balanced, that you have the foreign competition that would try to improve the quality of the services. But at the same time, we need to make sure that we have our own domestic service providers that will make sure some of these essential products and services are going to be guaranteed. And so I think, as China continue to grow and continue to maturize and also continue to improve its ability to provide these essential services in telecommunications, internet, education, culture, and healthcare, I think there are opportunities to introduce, more foreign competition, to use the competition as a way to drive innovations and improvements. And at the same time, I think, China is confident enough that it is able to withstand some of these foreign competition and also protect its own domestic and national interests. So I think it's a very important balancing act. I would warn against very rapid, removal of restrictions, especially in telecommunication, healthcare, and also financial services. But at the same time, I think with, gradual approach, and also, through a more sort of a, rigorous process to make sure that we have the reliable foreign partners, I do see that there are benefits to open up these sectors. Not to mention, as we know, China's service sector productivity is still relatively low, right, compared to the more sort of advanced countries. And so there's room for China to continue to improve its productivity and quality of services in these sectors. And so introducing foreign competition and technological know-how and management skills in these services will benefit China and of course provide profitable opportunities for foreign partners as well.
And Dr. Zhou, so how do you think the China's policy of opening up will contribute to shaping the global trade landscape?
Yeah, China is a very big country. We have a lot of products to produce. I think that is also, kind of things that we can share with other countries and other markets. But on the other side, we are the big market. I mean, the Chinese people are having more opportunities to trying to share some of the products from other countries. So CII is providing these opportunities. In this era of digital economy, we see there are so many combination and integration between the trade and investment, between the manufactured products and the services. So we are in the era to provide so many possibilities. I think Chinese market is definitely one of the most important one in the world.
And yeah, so we've seen this time some global South countries, such as those from the Africa and Southeast Asia, actively participating in the CIIE this year. So how does China's opening up benefit these countries?
Right. So I think, we have seen a sort of a multilateral world, multipolar world is really forming. And so the South-South cooperation and solidarity is very important. And so one of such solidarity and cooperation is manifested in the trading relationships. So you mentioned, Africa and Southeast Asia countries, they have been really increasingly as an important trading partner with China. China trades a lot with ASEAN countries. And now, as we just mentioned, China removes tariffs for some of the least developed countries in the world, and many of them are in Africa. So I think, for one, China is going to provide that marketplace and have the opportunities for some of these low-income countries to be able to sell their agricultural products, the minerals, and some of the critical, supplies to China's market. And on the other hand, I think China is also providing a lot of capacity building for these countries, right? Through BRI, through other investment projects, China helped these countries to, in a way, grow their industrial production capacity, allow them to also improve their agricultural production. So I think, these are really important on the one hand to really help these countries to be able to produce and export. And then secondly, to provide the market for these countries to sell their products to China. And of course, I think China is also getting sort of the mutual benefits, right, by having closer relationships in trade. In a way, I think China is able to diversify its trading partners and structures and also destinations. So I think that also benefits China in its turn. So I think these are mutually beneficial relationships, and I think there's also a lot of potential to expand over time.
And Dr. Zhou, so we've seen an increasing number of countries establishing pavilions at this year's CIIE. So what message does this transcend, and what are the fresh new things do you find for this year's CIIE?
Yeah, for this year, I mean, these are mainly two kind of, things happen. The first one is the traditional trade with China. I think that many of these trading partners are trying to use this platform to strengthen their relations with China. They are providing more and better quality products to Chinese consumers through this platform because it is very easy for them to have the mutual trust to each other and they know more about the other side, so they can have a better and more efficient ways to establish the trade relations with Chinese market. Well, the second level, I mean, that is something to do with the innovative ways to meeting the different demands in China. Like I found that there are some kind of, cosmetic making companies in this platform. They are trying to provide Chinese people with a better products, like for a lot of Chinese people who want to have a better care about their skin and they need better products. So they are trying to find out what the Chinese consumers are really want, like for certain areas, maybe there are more sunshine, and for other areas, they may need more relax on the, to help them to be keeping the moisture. So, I mean, these are a lot of new areas that these companies are trying to diversify and trying to make a more specific discovery about the consumers' demands. While the third one, I mean, that is something to do with innovative ways to trying to give the consumers that some the experiences that they haven't been enjoyed before. So these companies are trying to provide Chinese consumer with the leading or the cutting edge technology and products for Chinese consumers to trying to see. And I think there's something to do with artificial intelligence, also something to do with other technology innovation. And this is definitely one of very important for us to learn from other companies in the world.
And Yan, so as we know that China has recently rolled out a series of policies to boost the economy, and how will this recent monetary and potentially significant fiscal policies influence the foreign direct investment in China?
Right. So I think we already see some positive returns when it comes to the equity markets. We start to see more foreign investments coming in, more in the form of portfolio, right? So to participate in China's stock market, to take advantage of some of the swap and relending facilities from the central bank that boost the stock market returns. And for, I think, foreign direct investment, it may take some time for investors to come back the way they did, prior to the pandemic. But again, I think, China's economy is still going strong. We're still talking about the 5%, around 5% growth target is still well within the reach for the year. And still that makes China's growth rate, 5% compared to the global average, about 3.2%. It still makes China a very high growth country. And so, not to mention, I think as Dr. Zhou talked about, Chinese consumers have very large demand. When you look at the first 3 quarters of this year, China imported 13.7 trillion yuan worth of products, and that is about $2 trillion, which is a 4.1% growth year to year. And that is a very significant market for the rest of the world. So I think for foreign direct investors, they cannot miss China's market, and they also cannot miss China's supply chain. So we still see, market-driven companies coming back to China to, produce in China for the Chinese market. But we're also seeing, companies like Apple and Intel, they're increasing their supply and production in China to supply the rest of the world. So I think, it's clear that China still has really good fundamentals, as Premier Li talked about in his speech. So that means going forward, China is going to continue to deliver, good growth prospect and also very innovative economy that I think the rest of the world won't want to miss.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and also Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation. And after a short break, a prolonged strike by Boeing staff is over. But what are the challenges ahead? Stay with us. You're listening to Biz Today. I'm Zhao Yang in Beijing. The Boeing strike ended after workers agreed to a 38% pay raise. Boeing workers accepted the new contract offer, ending the 7-week strike that had halted most jet production. The union said members voted 59% in favor of the new contract, which includes a 38% pay rise spread over 4 years. However, the deal didn't restore the traditional pension plan they lost 10 years ago. So, Yan, first of all, what's the latest development for Boeing, and what are the details of this new contract?
Right. So as you just mentioned, the whole strike started on September 13th. Then the Boeing has made some so-called best and final offer on September 27th, but 2 days later, the union rejected it. Then Boeing came up with another tentative deal plan that was put forth on October 19th. And then October 23rd, the deal was rejected again. So this is really the third time that Boeing came up with a deal, a plan on October the 31st. And so finally now it was, as you mentioned, out of the 26,000 workers that voted, 59% have approved the plan. And it does include, as you mentioned, 38% pay raise in 4 years. Right now, the mechanists on average they're making $75,000 And so in 4 years' time, that would increase to $119,000. But the pension plan that has been frozen for 10 years was not revived. And that, I think, is really, made a lot of the Boeing workers are still not happy. So in terms of what this is going to be look like, it is good that this right now is sort of settled. But still, this means that, Boeing is going to take on an extra, $1 billion of costs to pay the salaries. They're also behind in the production. There are 6,000 jets that are in the backlog that they have to recover for the production. And I think that they still have a lot of problems in terms of the recent episodes of a lot of technological backlash, a lot of technical problems. And so in a way, I think there's still fundamental problems of Boeing's strategy, which looks like it's prioritizing their shareholders over other stakeholders. So one example, I think, it's really telling is that when you look at the CEO of Boeing, Ka-hon, his pay package was $21.7 million in 2020. And 2023, right before he retires, his pay package was $33.8 million. So this is a 56% increase in just 3 years. So I think, there's still a lot of equity issues here. And Boeing is still spending large amounts of dollars in their stock buybacks, right? Between 2013 to 19, they spent $43 billion on stock buybacks, which will boost their share prices and enrich their shareholders. And this amount of money is even more than the total profits that they made during this time. So I think there's a lot of problems still with the quality control issues, with technical problems, and also with the lagging orders for their 737 MAX. So I think Boeing's situation is not out of the woods yet, but this at least could be a little bit sort of breathing room once the workers go back to work.
So, Dr. Zhou, actually, Boeing released an earnings report in October showing the company had lost $6.1 billion over the third quarter. So what's the cost of the strike for the company?
As Yan mentioned, I think that the strike firstly have suspended the production and the manufacturing of those jets. And that is definitely one important issue because we know that especially for the main producer of the airplanes, it is one of the two main producers of the airplanes in the world. It has a lot of customers around the world. So they need the airplanes in the urgent. I think that is a very important thing that one company can have more credit by supplying or fulfill their contract on time. But if Boeing cannot do that, it definitely will reduce the expectation of the market, and some of the potential customers may decide to turn to another provider of these airplanes. But the second, I think that is also, when we look at the strike, there are still about 10% of employment are be laid off. So they are giving a lot of pressure on, what are the potential futures of the employment nowadays. So the people are not so, helpful. Even in the Boeing right now, they are thinking about whether it is possible for them to be further, be in the unemployment status. So the strikes has shaken the position of Boeing in the, maybe not in the short term, but in the longer term. And the people are having more problem with that, especially for the banks and also the other areas. We are hearing that Boeing is also considering about to sell some of its part, like for the astronauts part, and also something to do with other areas. And that is definitely not good even for the United States government, because Boeing is also a very important provider or supplier in the military, the airplanes, and also a lot of weapons they are providing. So actually, the strikes has a very big impact because Boeing is one of the main, the brand of the U.S. manufacturing in the past almost 1 century. So I believe the strike is a very, very important thing, and also the lessons we all have to learn from.
And Yan, so Boeing was a company that once prided itself on engineering excellence, but in recent years, numerous problems have been there. So how did that happen?
Right. So I think that in some ways reflect a general trend in the United States industrial landscape, right? This phenomenon, the so-called financialization that really got started or accelerated rather in the 1980s. So I think, again, a lot of these publicly listed companies are really trying to prioritize their shareholder values, right? The so-called maximizing shareholder values. So like I mentioned earlier, they are using a lot of their profits on stock buybacks, so that help to boost the stock prices in the short term, rather than using this money to invest in their people, invest in the technologies, and invest in their manufacturing capacity at home. Rather, what you see, Boeing has been really outsourcing a lot of productions, especially also software developments. And so that contributed to a lot of the technical problems and challenges. Not to mention, as I also mentioned earlier, that the CEOs is taking home tens of millions of dollars, and yet they scrap the pension for their workers and also not giving sufficient raise to their workers, right? $75,000 is really a very low living wage, in places like Seattle. So I think that is one major problems with Boeing, but also I think with many American industrial firms, and that creates a lot of industrial hollowing out of these companies. And I also want to echo what Dr. Zhou just mentioned. Even though now this contract, this deal has been made and workers are going to return to jobs, Boeing does plan to cut 17,000 jobs, which is about 10% of its total workforce. So it's not like they're going to change the strategies and now reinvest more in their workforce, but rather they're still committing to all these cost-cutting strategies. They're going to, sell off or close their space programs. They're also going to stop most of the 767 production because there's a low demand. And so I think there's a lot of focus is still on how to cut costs, shrink the workforce in order to, again, boost the stock values to enrich their shareholders. So I don't think there is a fundamental improvement in their long-term strategies going forward.
Well, thank you very much, Yan Liang, Professor of Economics, Willamette University, and also Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.